Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back to Just Some Guy Trading. I'm Kevin McCormick, and this is our weekly Traders Outlook for April 9th. This week we're going to cover the S&P 500 as always, touch on the CPI data coming out from the United States and China. Then we're going to head into the energy market with crude oil, heating oil, natural gas, and we're going to finish up with soybeans, soybean meal, and corn. As always, this presentation is for educational purposes only. The stock market was closed Friday for the jobs report that came out. That was just slightly below expectations. Didn't really drive much in the futures market. I always dislike these holiday trading days in the future market. We were barely open on Friday, but you can see that we did make a little bit move higher on that jobs report. So I think the market is still in a great position to move higher through April, as I discussed in my special report on the April rally that I'm expecting. This coming week, we have one of my favorite trades, and that's the tax trade. What we don't realize as traders out there is a lot of people sell a lot of stock ahead of the check they need to write to the IRS on April 15th or this year, April 18th. So I'm going to be continuing to look for buy signals this week to get into the market ahead of what I expect to have a nice end of April rally and strong rally after taxes are paid. This week we have CPI data coming from China and the United States. CPI reports around the world have been declining, showing that inflation is going down. If this continues, I think that could be what causes the market to move higher this week and push us back into these 4,200, 4,225 levels that I've discussed before. That'll be our next area of resistance. Maybe a good area to trim if you're long, but I think at some point this month, we're going to power through these levels and move towards 4,300 before we may run into our May pullback. Okay, next up, let's take a look at crude oil. We had a very interesting week in crude oil, and congrats to any of my viewers out there that were long ahead of the surprise OPEC cut in production that was announced Sunday night before the futures market opened. That caused this quite large gap up here. But the interesting thing that happened, and for people that haven't watched all my videos, I was saying we were in a buy 65, sell 85 market in crude oil. One of the viewers did ask if I still felt this is the range. We might be able to push up towards 90 now, but this week showed that the 85 might still be the top, because as you can see here, there is no continuation upside follow through in the crude oil market, which means that we could be set up to come back and fill this gap at some point in the near future. And when we talk about the supply and demand dynamics here, apparently we can't fill the strategic oil reserve right now, so the government's not a buyer. But more importantly, take a look at what happened with the commercials this week. We were at all-time highs and what I consider to be lack of selling by the producers in the crude oil market. But this week, they took full advantage of the OPEC announcement and were huge sellers of crude oil this week at this $80 range, which leads me to believe that we're probably going to be closer to this 85 top than 80. And we're in an area of consolidation right now without any more geopolitical risk and announcements. I don't know if there's much more room up in crude oil right now, but heating oil has looked very different for the last couple months. And let's pull up the heating oil chart now. So as you can see here, heating oil is back into this area as well, kind of similar to crude, but it did not have as drastic of a dip. But the big difference is, while crude oil has seen consolidation and selling by the commercials, we're actually seeing, and have seen for a long period of time, the exact opposite in the heating oil market. Here you can see that with the announcement from OPEC, the commercials were still in here, buying or not selling their crude oil. and we're getting into the area where the supplies need to be refilled for this winter, and the demand is still very heavy for heating oil. So right now, I prefer heating oil over crude oil if you want to go long. If you're a pairs trader out there, could be an interesting pairs trade setup. Short crude, long heating oil, but I'm really not a pairs trader myself. But these are just ideas out there for you. So keep an eye on the energy market this week with those. Next up, let's take a look at natural gas. Okay, let's take a quick look at natural gas. As we had discussed before, it looked like we're forming a bottom, but the trend down has continued. And I want to highlight it again for everyone out there who may be trading the Boyle ETF. You have roll risk coming up the next couple of weeks. The later dated contracts in natural gas are actually 10 to 20% higher than the current front month. And there's a good reason for this price difference. If we take a look at what has happened with commercials, they started heavily selling when we had this little bump up here and have just now looked like stopped their selling. We can't form a bottom and rally in natural gas as long as the producers are out there aggressively selling like this. So for me, natural gas, I'm not interested in this market at all right now, but I know many of my viewers out there like to get my input on this, but really I would stay away until we get a confirmed rally off of these lows in natural gas. Okay, we're going to finish up this week by taking a look at the grain market, starting with soybeans. As you can see here, we had this decline in soybeans, and then the USDA reports came out, and we rallied right back into these areas that we were in before. Currently have our buy signal in the Williams %R in soybeans, but there's one thing that has holding me back with soybeans. It is a bullish setup. Fundamentals are there, but what's throwing me off a little is the commercials have been in here selling the entire time in soybeans as well, even though we have a fundamentally bullish setup. So I'm a little perplexed when it comes to soybeans, but the setup in soybean meal and bean oil are very different when it comes to our commercials report here. So if we take a look at soybean meal right here with the COT report, you'll see that we have a very different setup going on here. When we had that decline in soybeans before, soybean meal came down, but instead of selling, the commercials came in and were heavy buyers with soybean meal. And we also have a premium going on in this market right now. So the interesting dynamic in the soybean market between soybean meal, soybeans, and if we take a look at soybean oil as well, which is used heavily for biodiesels outside of the United States, you see a similar thing here. Commercials have been coming in heavily buying these products. And so it's giving me as a trader an interesting setup here. Do I want to go long soybeans? Do I want to go long bean oil or soybean meal? What we'll highlight here is bean oil is starting to make its move up from these areas down below and has been in a longer trend down compared to the others and is also in the buy area, whereas we actually have an opposite setup with soybean meal right now. Soybean meal has been in a strong market, heavily premium for a long period of time, but its trend of momentum has just started moving down instead of up. I think there's great trading opportunities in both of these markets with soybeans and soybean meal. Take a look for your buy signals, I think, in the entire complex right now. And we're going to finish up with corn today. I've been bullish on corn. The fundamentals are there for corn right now. We popped right off of this bottom that we kind of discussed this falling through before, and our 18-day moving average has moved back higher. We are in a buy setup right now for corn. I tried to get along this week, did not turn out well for me, but I will also highlight here with the COT report that I love to point out to everybody. We did have this big move up. We had a lot of China buying, but now commercials have come in a little bit heavier in selling. So I think this could be an interesting week for corn to see what happens, to see if we get that buying follow through in this market. And just to highlight, soybean and corn have similar seasonals right now where we should be pushing higher up into the summer until about the end of June, July timeframe. Then we should start looking for our decline in the grain markets. Thanks for tuning in to Just Some Guy Trading. Please hit subscribe and like for this video so that you can see all of my content as soon as it comes out.